Ladies and gentlemen, good day and welcome to Welspun Enterprises Limited Q2 FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Salil Bawa, Head Investor Relations of Welspun Group. Thank you, and over to you, sir.
Thank you, Malcolm. Good afternoon to all of you. I will take this opportunity to also wish you happy Dhanteras and Diwali greetings. On behalf of Welspun Enterprises Limited, I welcome all of you to the company's Q2 FY2024 earnings call. Along with me today, I have with us Mr. Sandeep Garg, Mr. Soren Patel. From the Welspun world, I have Mr. Akhil Jindal, Group CFO and Head Strategy. And I also have Mr. Lalit Jain, CFO for Welspun Enterprises. From Welspun Enterprises, IR side, Siddharth Bhardwaj, my colleague, is also there. We hope you have had a chance to review the investor presentation that we filed with the exchanges yesterday. It is also available on the company's website. As mentioned during the discussion, we may be making references to this presentation. Please do take a moment to review the safe harbor statement in our presentation. As usual, we'll start the forum with opening remarks by our leadership team, and then we will open the floor for your questions. Once the call gets over, should you have any further queries that remain unanswered, post the earnings call, please feel free to reach out to us. With that, I would now like to hand over the floor to Mr. Sandeep Garg, Managing Director, Welspun Enterprises. Over to you.
Thank you, Salil. Thank you, and good afternoon, everyone. I welcome you all to the Welspun Enterprises Q2 FY 2024 result conference call. I would like to start by wishing everyone warm Diwali greetings and happy Dhanteras. So, coming to the performance, following up strong performance of Q1 FY24, we have continued the second quarter of FY24 with robust profit growth of 36% year-on-year. This profitability is on the back of improved execution of our key EPC projects in both road and water segments. The revenue from the operations year-on-year basis has increased from rupees 509 crores to 542 crores, that is 6% growth year-on-year. The delayed extended monsoon and the NGT restrictions on few of our projects have impacted the quarterly results in terms of revenue. As we enter a seasonally favorable period, I expect pickup in the execution of these key projects and thus delivering a strong performance in the current financial year. Talking about the order book, we have a very strong order book of rupees 9,100 crores, which includes approximately 1,800 crores of O&M and asset replacement for the MCGM STP project or Dharavi project as we call it, as on 30th of September 2023. Further, as was informed in our Q4 FY23 investor call, I am pleased to confirm that as against rupees 259 crores receivable from the SPVs controlled by Actis. We have received approximately rupees 250 crores, and Actis has confirmed release of any further payments as and when received by the SPVs from the clients. I will now want to throw some highlights on the operational issues in the concluding quarter. Our HAM road project at Satanadapuram Nagapattinam, or SNRP, has continued steady progress and is on track for the revised completion date of January 2025. We have completed approximately one-third of the project. I would also like to mention that despite our and NHAI's best efforts, we have not been able to receive approval for supply of pond ash from the thermal plant. We have already raised a claim against this from NHAI. On HAM project, Anta-Simaria, the project has already crossed the two-thirds threshold, and we are confident of completion before the revised target of October 2024. As I had stated in my previous call, the COS, which is a substantive value, has been approved, yet the final order is yet to be released by the client. Our EPC work at Varanasi Aurangabad NH2 project is progressing well, and we are on track to meet our completion target. The project has crossed 60% threshold mark during this quarter. Coming to the water segment, the UPJJM project in the UP state under the Water and Sanitation Mission has crossed a significant milestone of over 50% of targeted households connected. Coming to the Dharavi wastewater treatment facility, we have received the clearance of engineering and design of SBR and are at advanced stage of approval for other major structures. We expect the civil work to commence in full swing now that the monsoon has ended. We expect that the limitations imposed on construction due to poor environment conditions will be withdrawn soon. During the quarter, we continued with our efforts in the oil and gas space to develop the blocks that are housed in the joint venture Adani Welspun Explorations Limited. I'm happy to share the approval of the field development plan for the block B9, which has been received by the company. I would want to bring to your notice that a clarification that this approval has come from MOPNG/DGH. With this development, we have now moved ahead and have submitted our interim EDP for block NBOSN 2005/2, or what we call Mumbai block. It is our endeavor to commence the gas production at the earliest possible. Towards this goal, we have awarded the contract for well design and engineering, and we are currently conducting technical evaluation to appoint the FEED contractor. I would like to reiterate, in line with our prudent approach, we will commit future capital only upon clear visibility of commercial viability of the blocks in hand. Coming to the Welspun New Energy, our evaluation of the new energy space is advancing well. Our CEO, Mr. Kapil Maheshwari, and his team have been working with various agencies and governmental departments to finalize our strategy, and as soon as it is in a reasonable shape, we will share our plans with you all. On the future ordering within the road vertical, we have seen a muted H1 FY 2024. Having said this, we see promising road opportunities from NHAI and in state of Maharashtra. We have applied for pre-qualification for projects in the state of Maharashtra, both for roads and water vertical, evaluation of which is in advanced stages. We expect the results of these to be out by the end of current quarter. To sum up, keeping our return expectations, we aim to secure additional orders of rupees 6,000 to 8,000 crores in both road and water verticals during the current financial year. We are optimistic about our growth trajectory and confident in capitalizing on the government's ongoing focus on improving and developing countries' infrastructure sector. As I conclude, I am delighted to share that Welspun Enterprise was recognized as one of the top challengers of 2023 by Construction World magazine. One of our road EPC projects, namely Varanasi Road project, was presented with the Gold 4-Star Road Safety Award by World Safety Organization's India chapter. On our previous earning call, post-quarter results, I had shared details of share purchase agreement to acquire 50.1% stake in Michigan Engineers Private Limited, or MEPL. In the recently concluded quarter, we completed the acquisition for a consideration of rupees 137.07 crores. I am excited to see Michigan Engineering becoming a part of Welspun Enterprises. As a subsidiary of Welspun Enterprises, Michigan Engineering will continue to run professionally under the current existing management led by Mr. Soren Patel and operate as an independent entity. I am happy to have Mr. Soren Patel, MD of MEPL, sitting alongside with me to address this investor interaction. With this, I now hand over the call to Mr. Soren Patel, MD of MEPL. Over to you, Soren.
Thank you, Sandeep, and very good afternoon, everyone. Happy Dhanteras and Diwali wishes to all the participants on the call today. I'm delighted to share this forum with Mr. Garg and other members of the senior management team at Welspun Enterprises. I'm excited to see Michigan Engineers becoming a part of Welspun World. So, of course, Welspun Enterprises Limited, which is one of India's fastest growing global conglomerates. The board of Michigan Engineers has approved the renaming of the company to Welspun Michigan Engineers Private Limited, which is both a matter of prestige and responsibility. I, on behalf of Welspun Michigan team, assure you that we will be a value accretive partner to Welspun Enterprises Limited. Historically, we have been operating in Maharashtra and a couple of other states of India. These projects are spread across different verticals. Our specialties such as segment tunneling, micro-tunneling, marine works, deep pumping stations, rehabilitation and repair of sewerage lines, and major bridge constructions. However, with the strength of Welspun World, we see expansion in both our geographies as well as scales of operations. Perhaps it would become clearer if I share certain details on a couple of our key projects just begun. The Mithi River Water Quality Improvement Project is a 2.6 meter diameter tunnel, which essentially takes the corrupted effluent flows of two nalas forming the northern boundaries of the Mithi River in Bombay and brings it to the currently under construction Dharavi sewage treatment plant, where this effluent will be treated. This tunnel is of length 6.6 kilometers, of which we have already completed 2.7 kilometers in the first 12 months. The slated date of completion of this project is 2026, February. We expect it to be on time and run the financials as projected. The Priority Sewerage Tunnel 1, which is another large tunnel system that is planned from Dahisar to Malad Pumping Station, is a 5.8 kilometer tunnel of 3.2 meter diameter. We have already lowered the tunnel boring machine in the shaft that begins this tunneling process today, and we expect that, being such an auspicious day, we will begin the act of moving the cutter head tonight before the day turns. This project is slated to be completed in 2026, August, and we expect it to be also on time and on the financial projections. We have been an engineering solution provider for urban infrastructure needs, which is a niche area. We wish to operate in the specialized niche areas of tunneling and water rehabilitation projects on a much larger scale nationally. Historically, we have been a very profitable company, and our EBITDA growth over the last 3 years has been a CAGR of 33%. The EBITDA margin in H1 FY24 has been 24%, and with the balance sheet strength to back up, thanks to WAL's investment, we expect this to improve further. Although small currently, our Q2 revenue is at 82.4 crores with an EBITDA margin at 24% and a PAT margin at 17%, which we look forward to expanding exponentially in the years to come while maintaining profitability. Our total outstanding order book currently under execution is close to 1,610 crores with approximately 170 crores of operations and maintenance income. This order book is largely executable over the next 36 months. I must add here that I'm not including close to 275 crores of orders where Michigan is the lowest bidder and awaiting work orders. Our order pipeline is healthy, as you can see, and we have identified projects, new projects worth 20,000 crores, which we will be bidding going forward. As an engineering solution provider for urban infrastructure needs, we are always on the lookout for advanced technologies, and in this direction, we are engaging with global companies to bring in technologies which are both cost and time effective in the segments of tunneling and water treatment. I shall be happy to share details once the principles of association are agreed between the parties that we are constantly in communication with. With this, I will close my remarks and hand the call to Lalit Jain, CFO of Welspun Enterprise Limited, for an update on the financials. Thank you. Over to you, Lalit.
Good afternoon to everyone on this call today. Many thanks for being part of this call. I wish a very happy Dhanteras and happy Diwali in advance. I'm sure you would have had an opportunity to review our financial numbers published yesterday. As Mr. Garg shared, we have continued our strong performance that we delivered in the first quarter. At the standalone level, our revenue from operations for quarter 2 show a growth of 6% year-on-year basis to rupees 542 crores, and along with other income, our total income increased by 10% to 571 crores. We reported EBITDA of 88.2 CR, which has grown by 54% over quarter 2 FY23. Operating EBITDA has grown 28% in Q2 at 59.5 CR, which were up to a margin of 11% as compared to 9.1% in quarter 2 of FY23. We have improved our reported and operating EBITDA margin over same quarter last year. This operating EBITDA margin is within our indicated range of 10 to 12%, and we are reasonably confident of maintaining it on a full year basis. Recall that quarter 1 showed a one-off cost recovery, which resulted in a higher operating margin. Our interest expenses has dropped to 8.8 CR as we have retired the NCD on our standalone balance sheet. I do not anticipate an increase in the interest expenses from these levels in the near future. Our standalone profit after tax has increased by 36% year-on-year basis to rupees 53.8 CR against 39.6 CR in quarter 2 FY23. Our H1 PAT has increased by 122% to rupees 143 crores against 64 crores in H1 FY23. Now coming to our consolidated numbers, I must start by saying that we have recasted the numbers to account for the asset sale we undertook to Actis and the consolidation of Michigan Engineers in quarter. I would want to address the degrowth of PBT in Q2 FY24 as compared to Q2 FY23 by 9%. This is due to the exceptional item in Q2 FY23 on account of fair value evaluation of some of the SPV for rupees 66 crores. Having said that, we delivered consolidated total income of 692 CR with reporting EBITDA of 129 CR. Our consolidated PAT is at rupees 69 CR. As you would have noticed, PBT before exceptional items on year-to-year basis, there is a growth of 143%, that is from rupees 40 CR to 97 CR. I would like to mention that due to consolidation of Michigan Engineers as a subsidiary, the contribution of Michigan Engineers towards EBITDA is 16.8 CR, which is 24% of their revenue. However, 49.9% of this EBITDA has been reversed due to minority interest at PAT level. Now coming to our balance sheet, as on 30th September, we have net cash of 880 crores. The reduction of 668 crores as compared to 31st March 2023 is on account of payout of MEPL acquisition of rupees 137 crores, followed by the equity investment of rupees 112 crores in our ongoing project. Further, we have buyback worth of rupees 289 crores and rest money utilized for the working capital. With this, I will hand over the call back to the operator for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question we have is from the line of Rohit from Antique. Please go ahead.
Thank you for this opportunity. Congratulations on a good set of numbers. So if my first question is on the addressable opportunity that we are talking about in terms of garnering the order inflows of 6 to 8,000 crores. Now, we are given to understand that there are some policy changes mooted by NHAI. In fact, the NHAI has shortlisted some 15 BOT toll projects. In that backdrop, would you be keen to explore BOT toll projects? Will that be an area of attractive opportunity for you?
So, as I've been maintaining, we are agnostic to the model of contracting. We are present across the EPC, the HAM, and as well as the BOT in the road sector. So we will definitely be mindful of these opportunities which are coming, where we believe the competitive intensity is going to be lower. However, as I've always cautioned, we are going to be driven by the risk-reward metrics and be very mindful of bids in terms of the return expectations. So with those caveats, for sure, this segment will be looked into.
So also, because this question came largely in the backdrop of the fact that the NHAI awarding is slow, and if you have to make a choice, you either have to go for BOT toll or maybe something in water projects. So what are the addressable opportunity you have, if not for this roads, in the water segment, so, the big ticket projects?
So we are very bullish about the water projects, as I've been maintaining. As we speak right now, there is an opportunity of water treatment plant in Bhandup, a very large contract. So we are very clear that water is going to, and the EPC play in the water or a development play in water is going to be a significant portion going forward in the business mix that we do. I think we will have to surely look at the toll projects, but toll projects we will look only and only to the return expectations that will compensate for the risks that you as a developer you take of a toll project. We will definitely also look at EPC opportunities which seem to be building up in various states where we think that there is a better risk-reward return relationship. So we will be also looking at that.
Sure. In terms of the drinking water projects, do you think there are states that gives you further opportunities? Are there some elections, state elections, that is a impediment to awarding of the contracts?
So coming to the projects typically in the form of UPJJM projects, I think till the elections are not concluded, this opportunity is going to be on a bit of a standby right now. But there are going to be larger opportunities in terms of treatment plants and interlinking of waters and this irrigation projects, which would come up during this phase.
Got it, sir. So my second question is on the margins part. We have had good margins. I missed out on the opening remarks if there was any mention about it. What could be the sustainable EBITDA margins going ahead?
So as we said, the operating EBITDA margins, we are not changing the guidance of 10 to 12%. Obviously, the reported EBITDA margins will be much healthier because of the substantive cash that we carry on the balance sheet, or the net debt is negative. So we do expect the reported EBITDA margins to be much higher.
Sure. I will get back into the queue. Thank you.
Thank you. The next question is from the line of Diwakar Rana from Prudent Equity. Please go ahead.
Good afternoon, sir. Am I audible?
Yes, you are.
Yeah. Sir, 8 months have passed by and we haven't bagged any large order. So with the order book of around 9,100 in hand, do you still believe we can grow around 15 to 20% for this financial year? I mean in 25, 26?
Yeah, as I said in my opening remarks, I would repeat myself. There has been a temporary slowdown, primarily in the road space of awarding by NHAI. But we see a lot of projects of substantive nature coming up, both in road and water in states, and they are at the size and scale that attracts us. So I think, and as I responded to the earlier question, there's a change of the model at NHAI level rather than a change in the awarding need to award the contract. So the need to build the infrastructure still exists. So, and we are willing to play that model of BOT toll. So I don't think there is a challenge in terms of sustained growth of the company or growth in the current financial year. The only thing is that yes, this year has seen a bit of a extended monsoon and unpredictable weather, and also certain entity conditions of environment being not so clean, which is putting some restrictions on the construction. Hopefully these will not impact much larger, but these are the imponderables that are there for our industry of our nature to deal with. Otherwise, I see no risk in growth.
Okay, sir. Sir, I have one question on monetization. So currently we have around 3 road assets. So are you planning to monetize this asset in the near term?
So we have 3 projects which I talked about in the road. Out of these, only 2 projects are from hybrid annuity model, which are monetizable. The third project is an EPC basis, so which is purely execution and completion related matter, so that we don't own anything on, or we have no rights beyond that. So those 2 projects, once they are completed, as a platform, we would definitely be looking forward to divesting at the right valuation.
Okay, sir. So one last question on the oil and gas part. So basically, are we pursuing this as a business strategy, or do you have plans to monetize this oil and gas assets in the coming future?
So the oil and gas as a play is a historical play for us. Do we see a long-term association in the oil and gas space? The answer is we don't see it for the long term. However, whatever needs to be done to monetize and optimize our returns, we shall be undertaking those activities so that we do not sell cheap.
Okay, sir. Thank you, sir. That was my last question.
Thank you.
Thank you. The next question is from the line of Chirag Singhal from First Water Fund. Please go ahead.
Yeah, thanks for the opportunity. I first wanted to confirm on the order inflow guidance. So did you mention order inflows of close to 68,000 crores in the current fiscal?
So our guidance for the current year's order book is anything between 6,000 crores to 8,000 crores across all verticals.
Okay, so this is the closing order book that you are expecting by the end of the year.
So assuming that it is 6,000 that we add further, and we have 9,000 approximately right now. So it should be about 14,000 less the execution, which is close to 2,000. So around 12,000 crores is what I would expect. Anything between 11 to 12,000 crores.
11 to 12,000. Got it.
I think just to clarify, this order book will not include the Michigan separate order book. So while Michigan is maintaining a healthy order book of 1,600 crore plus, what Sandeep just mentioned is the pure Welspun Enterprise order book.
Got it. Okay. And how much of this order book will be from the water segment? If we talk about the expected closing order book at the end of the year, how much of that would be water segment, ballpark?
So I would expect anything between 50 to 60% will be water, if not more.
Okay, got it. So my second question is regarding Michigan. So you just mentioned 1,600 crores of order book is what you have. So what is the general execution time for the order book in Michigan? And if you can also provide some estimate on the upcoming year's revenue guidance as well as the EBITDA margin. So for this quarter, you mentioned that the EBITDA margin was 24% in Michigan. Is that something that we can, look at even for the upcoming years?
Yeah, I think I would request Soren to augment to whatever I'm saying here. But Soren, feel free to jump in. Historically, the Michigan has been maintaining healthy EBITDA margins of around 22 to 24%, and we expect them to be a bit better rather than any adverse change to it. Now, given as Soren put it across in his address, we are planning for a substantive growth going forward in their revenue, which is a work in progress at this point in time. But given the current order book, I think we can expect something like about 25 to 30% CAGR on the revenue growth, right?
Yes.
Yeah. So based on the current forecast, there is a 25 to 30% revenue growth that we can expect on year-on-year basis. And however, the intent is to grow this much faster by geographically diversifying as well as creating larger offerings to the industries that they serve.
Okay. So for next year, which is FY25, you are suggesting that 25 to 30% should be the aim in terms of revenue growth for Michigan. And generally, yeah. Hello?
Yeah, please go ahead.
Yeah. So generally, what is the execution time period for the orders that you have in Michigan?
So normally, average period for the tunneling and these kinds of projects is 36 months or therearound.
Okay, got it. All right, sir. Thanks a lot and good luck.
Thank you.
Thank you. Before we take the next question, a reminder to all participants that you may press star and one to ask a question. The next question is from the line of Ajay Gupta from Gupta Family Office. Please go ahead.
Yeah, hi. Good afternoon. You have been giving guidance of roughly 3,600 crores to be done this year on an execution basis. And post that, you have the acquisition, which was of Michigan, where last year revenues were in slightly in excess of 300 crores. So is it fair to assume that you would be able to still achieve 3,900? Or what is your view? Because 2 quarters are down the line and we have 2 left only.
Yeah. So normally, as you know, the industry is, the thumb rule is H1 is equivalent to about 40% and 60% in H2. So this is the kind of thumb rule that plays out. And as I said in my opening remarks, that there have been some delayed or extended rains and some NGT restrictions on a few of the projects, so which has led to a bit of a underperformance in the Q2 as we expected. So we are likely to be slightly under the 300 per month run rate at a standalone level is what we will think, but we will be definitely north of anything around 3,100 crores at a standalone level, and around 400 crores is going to be the revenue at the Michigan level. So this is what my guidance at this point will be.
But the Michigan numbers will only get accrued from August onwards.
Yeah. So correction that Michigan, because we acquired from August onwards, so the consolidation will take place only from August onwards.
So let's say, is it fair to assume about 3,100, like you said, for Welspun and another 250 odd for Michigan? I mean, is that a fair number to take?
It is a fair number to take.
That's a fair number to take. Fine. And from when do you think you'll be able to touch this 300 run rate? Because you have such a large order book pending, and this order book has been pending now, at least from your Concall of Q3, I think, of last year. You've been giving the guidance of 300 crores run rate, which itself would have taken 2.5 years, but you've not been able to touch anywhere close to 300 crores. So won't you have a lot of penalties coming up because of non-execution and non-performance, or late execution, whatever?
Let me address this question. Very good question. So the reality is that the delays are not on account of the company. The Anta Simaria project has received somewhere around 850 days of extension without levy of penalties because it is delayed by the client. Similarly, on the Satanagapuram Nagapattinam, the project has been extended to January 2025 with no penalties because the delay is not on account of because of us. Currently, as we speak, the Varanasi Aurangabad project has been, the I has recommended extension for about 9 months without any delay penalties because the delay is not account of us. Similarly, talking about UPJJM, they have already recommended 6 months of extension without any penalty because the delays are not because of us. See, in the current scenario that we are, as I said, there are 2 reasons that we are not able to hit the run rate that we are targeting is because there are hindrances that are coming in client end, and although we are claiming, we are attempting to claim as much as we can for the delays in cost, but however, it is impacting our revenue recognition. There are no penal provisions that are getting involved. However, there can be an opportunity for claims going forward. And as I said, it is also compounded by the two facts which are totally beyond our control in addition to the client's issues, is the nature's vagaries. There have been unseasonal, extended rains on the project sites, and there is, because of this pollution in these urban areas, restrictions that are coming in by MGT. The ponds are not being allowed to be excavated, the earth is not allowed to be moved, and in these longitudinal projects, these are critical elements for performance. So these things are impacting us, which are way beyond our control.
Thank you so much. The last one question. This quarter, roughly, what are you looking at, since we are already like halfway through the quarter? Would you be able to do because even if you're at 3,100, that leaves about 1,800 for you to do in 2 quarters, which is still an asking run rate of about 900 crores a quarter.
Yeah, so we expect Q3 to be slightly muted, because October saw some rains in unseasonal rains, so which has taken away almost 7, 8, 10 days out of that period. And if you see any rains or these pollution-related restrictions, each day in our kind of a scenario costs us almost like 5 crores or something of that nature. Even if we are able to do partial work, and if we are able to do nothing, then it's almost costing us 10 crores. So this is where we are, and these restrictions are way beyond our control. So I expect the Q3 to be slightly more muted than the average run rate of 900 crores, but Q4 should see better results, because one of the projects that we are doing in the urban area, we should be out of that particular project. That should get completed by then, so that revenue recognition delays will not come into play, and hopefully the SNRP project, which sees the return monsoon, it will not be so difficult this time. So hopefully if that happens, then Q4 will be much, much better.
Thank you.
Thank you. The next question is from the line of Akash Mehta from Capis Investments. Please go ahead.
Hi, sir. Good afternoon. So my questions are mainly on the Michigan Engineers acquisition. So could you share some operational details of the same?
Sorry, you may want to address,
yeah. In terms of our projects, you mean?
Yes, and any other operational details that you can highlight.
Sure. So our primary area of execution is in the underground space, and we excel at the creation of small diameter tunnels in urban metros, because of the congestion that would necessitate the fact that you can't do any open cut deep excavations along the roadways. So grey water becomes a high area of our expertise. Carting grey water due to the population density increases, etc., necessitates the increase in the size of the sewers and the stormwater drainage issues that have to be laid to service those areas. We are now moving from our standard under 2 meter diameters to between 2 to 4 meter diameters using tunnel boring machines. And we currently have 3 very large projects of an average ticket size of 400 crores that we are executing in the northern suburbs of Mumbai. The second area of our expertise in the underground space is the rehabilitation of underground conduits, which essentially means that existing old dilapidated stormwater drains, sewers, and water pipelines are rehabilitated using modern day cutting techniques such as fiberglass linings or thermosetting resins or wet shotcrete, or in our current project of 23 kilometers, a very advanced geopolymer-based cementitious product, which is a spray-on lining. This forms a substantial portion of our rehabilitation space and adds a nice edge to our turnover. The other operational areas where we excel at are we do a lot of work in the laying of pipelines using dredging, including drilling, blasting of rock in waterways. And typically that is being used by the industrial clusters around the rivers and estuaries and coasts to divert the effluents that are coming out of industries which were located geographically close to habitable areas, away from those habitable areas, for diffusion into larger bodies of water such as the sea, the Arabian Sea. And corresponding to that, we are experts at dealing with flood mitigation in cities, especially cities like Bombay, where we are responsible to build and maintain, operate and maintain deep stormwater drain pumping stations. So any area of engineering that requires dealing with the earth, we are there, and we seem to excel at it. And we have a substantial portion of our book order based on such activities.
Okay, sir. I think that was a really helpful answer. Thanks a lot. That's it for me.
Thank you. A reminder before we take the next question that you may press star and 1 to ask questions. Thank you. And the next question is from the line of Amit Shah from Nuvama. Please go ahead.
Hi, congratulations and wish you all, Welspun team, a very happy Diwali and happy Dhanteras. Now, I would like to you guys to throw some light on the current scenario. Is there a sense that especially the road thing is getting very competitive in the current scenario, and are we of course I know we are focusing more on water, but is the road thing getting more and more competitive? And since we are more keen on better margins, are we looking to participate less towards the road? Are things little unfavorable in terms of business right now? And secondly, I know that we do not focus on other geographies, but is there a possibility now that we are like debt free and we have more muscle power? Are we also looking at other geographies, say maybe something like Saudi, where maybe our Welspun Corp, or the other group company, would anyway have presence because of the pipes and supplies? Can we leverage with the help of Welspun Corp of gaining more orders from other geographies? Are we looking into it?
Thank you. To answer your question, I will try and answer in a couple of sections. Talking about competitive intensity, our analysis shows that the EPC space, at least at the NHI end, has been very competitive this year as well. All contracts that have been awarded to our estimation, to our evaluation, have gone below the estimate prices. However, the good news is the HAM projects, which are very limited awarded, there are only three of the HAM projects awarded this year. All fortunately have gone, as per our evaluation, above the price, above the estimate prices. So one thing that is which is coming very clear, that the capital allocation is becoming more prudent in the developers. The EPC space continues to remain competitive. With the introduction, with the focus of the government back on DOT toll, I think the space will get open for every kind of player who wants to play in a high intensity game versus the people who want to be more prudent and be more, reward-oriented companies. So I don't see that the business per se is going. However, as long as this competitive scenario prevails, we are going to be we will continue to be cautious in our bids. We will target returns, not only the order book. We see a lot of opportunities in near future, wherein we believe that our return expectations can be met even in the road sector. You are absolutely right that the focus will be water, because we believe that the water story is just begun, and it is a story of future. This story will continue in the country for a very, very long time, and we have got this at a right space. We have very good relationships in terms of our water play. We are already tied up with one of the best names in the world, like with Thailand for our Dharavi project, and then we are targeting the Bandung project also with one of the very good branded names. So the water segment offers us a differentiation which we can bring in because of our strength and our associations. So that will remain a focus area going forward for sure. Hope I have responded to your questions that were addressed. Coming to your question of looking at geographies beyond India, the answer is, if need be, we shall be looking for it. But at this point in time, we believe India is offering enough opportunity for us to stay focused.
Sure. Thank you so much.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Rohit Agarwal from RN Investment. Please go ahead.
Good afternoon.
Good afternoon.
Sir, we understand there are large treatment tender around. So do you see any, are we any in such?
We can't hear you. Can you be either closer or in a better area to ask the question, please?
Hello.
Yes.
Yes, sir. So there are projects in and around Mumbai. So are we having any interest in such projects?
Yeah, we surely will look at projects near in Mumbai and Maharashtra. We have had some very good run on the projects in Maharashtra, so we will surely look at them.
Okay. Also, sir, on the balance sheet side, I see a meaningful change in net current assets of ours. So can you just highlight some what has happened?
Well, earlier last time we have shown as mobilization advance as separate liability. This time we have net current assets. Well, 565 crore rupees mobilization advance we have taken, shown as a mobilization advance separately. This time we have marked it net current assets. What is the reason?
It is just a reclassification, because last time we were reporting mobilization advances separately. Now it is a part of the net current assets, as the case may be in all the balance sheets. So it is just a reclassification, which has been explained in a footnote also.
Okay, that helps. Also, sir, one last question. Sir, we have been filing by WCL and WLL towards investments in a renewable energy company that is under WNEL. So could you give us some sense on our commitments towards this business, or would we have to step in to fund the project?
So, thanks for asking this question. Yes, we created Welspun New Energy platform to participate in the new energy and the renewable space. So the business is surely going to grow. However, at this point in time, we are not sure whether we will participate in this space right now as an EPC or a developer mode. And once those key questions are answered by the team and the specifics of the pricing from the suppliers and the lenders' costs are estimated, we will decide whether we will want to participate as an EPC developer or participate in the development of this project in terms of ownership as well. So once these considerations are clear and put up to the board and the clarity comes from the board, we will come back to you and appraise you about that.
Sure, sir. Sure. Thanks. Thank you, sir.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Sandeep Garg for the closing comments. Go ahead, sir.
Thank you. I want to thank all the participants for joining us on this call today, and I hope we have been able to address all your queries. We remain committed to creating value for our stakeholders, and our focus is on delivering improved return on equity and return on capital employed. I look forward to speaking to you once again in near future. Meanwhile, please feel free to reach out to our investor relations team, Siddharth, Salil, or SGA, or our IR agency for any questions or feedbacks. A very happy Dhanteras and happy Diwali in advance to all of you. Thank you.
Thank you. On behalf of Welspun Enterprise Limited, that concludes the conference. Thank you for joining us, and you may now disconnect your lines.